Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan's wrapping up the market overview, market outlook for the week. It should go out later today as usual, and it is about 11:20-ish Eastern time on Sunday, February 26, 2023. We'll flash our trusty disclaimers and intellectual property rights notice. If you would please have a look at those. And then we'll get going and we'll start out with a recap. So let me quickly talk about this. This is what I'm planning on covering. I'm going to try to keep this off screen so I can have a guide because so much is going on, and there's so many things I'd like to share to maybe help out this week, maybe help out in the future. But there's just a lot going on, and it'll be tough to really, I think, remember everything on top of just discussing the charts. So let's get started on things. And I may have to stop the share briefly, and then we can move this out of the way somewhere. And then I will pick this back up, and hopefully we should be dealing with a grid. So I think the grid should be showing now. And the reason I'm starting out on the grid, and this is really what we'll cover in sector situation a little bit more, but there's not much to say, right? I just wanted to flash for everyone that only watches macro measure that virtually every sector started to feel the pain last week. You could see that virtually every one of those broke down. They're not really oversold yet either. They're starting to work their way towards 30 on the RSI. You can take a look at them. Some of them, of course, are in a little better position than others. Some are worse. For example, healthcare, which had been sort of channeling for a while there, that looked like it might try to do something briefly. And boy, that was the end of that, right? They started making new lows with it. There's gaps below, etc. So I just wanted to note that this became more of a risk-off situation. But let's start out quickly on the recap of last week, and hopefully this will work. So let me get a better view for everyone. Here's our trusty proxy for the market in the form of the SPY. And we were trying to see, I think as the prior week ended, we were wondering, okay, that the SPY left the triangle we had drawn and it closed here. And then we had our 4-day week. We thought, okay, well, is it going to try to work its way back up with the way that it closed and try to work its way back up towards the breakdown level or back below resistance, which would be that, well, I'll make it blue, which would be this line here, and then try to work its way back up, because we did have this false breakout attempt or two prior to that, but that wasn't in the cards at all. You could see the breakdown was a real thing. It kept going, and you could see that this kind of hot pink line that I'll make blue, that one that we've been charting for such a long time, we thought, well, if it breaks down for real, it's likely going back to test things in terms of the former resistance line to see if it can convert that to support. And let me bring a little more time in now. We need the, excuse me. So we'll just make this a little bigger. So that's what ended up happening there. And now we're in a very, very interesting situation, because you've got all the SMAs that are bigger picture ones, and in terms of the 50 in gold, you've got the 100 down here in dash white. The 150 and 200 are right about near the lows that we saw on Friday. Now you're still below the 50. So it just got really interesting. You could see the short-term SMAs, the 10, the 15, the 20 in white, red, and light blue respectively, all starting to roll over. You can see that the trend line has certainly been broken here. That support line that we have drawn in right there that I just made blue. And so we thought that if we did break down, that 400 would be a level. And then we really had 408. Sorry, last week was 407. And then we had we noted that 405 was in there. We also noted that the 403 to 400 range, and then ultimately 395-ish And you can see that if you look at the low that I'm mousing over right now, that was about 393 and change. So it got even a little bit below there. So now this is really interesting, right? Because we definitely move towards more of a risk off complexion where they started selling virtually everything. A lot of, as most of you know, a lot of the news lately has been that's been emanating from Fed speakers has not been kind to the market, and so it's really been it's really been a case of waiting, almost kind of waiting for this to happen. If you're thinking in macro terms, like, okay, when's the market going to recognize that maybe it got too far ahead of itself? So interestingly, right, there's always so many ways to look at the market, but interestingly, right, this leg here was never able to put together that final phase of moving higher. You can see this leg here really had much longer duration. This just wasn't able to do it, and we noticed that things began weakening and becoming problematic in here to an extent. Now that appeared here in, where's that at? Come on, guys. Do I have it in? No, I don't think I have it in meeting information. Membership homepage. No, I set this aside every time too. It's not crypto community. It really should be somewhere up here. Is content restricted? No, I'm not sure why I'm having such a hard time with this, finding this name here. I'll maybe have to come back to it, but it might be under here. That's not the one I was looking for either, because I have these set up for us in terms of looking at, was it this one here? Yep, this one here. So we had said that, hey, these are good things to keep an eye on when you get such a surge and you get really high with percentage of stocks above their 20-day. You can see that did become pretty high there. We've talked about this many times. And the 50 was the same thing with the 50-day SMA. So that also became very, very extended. And this is why I just wanted to remind everyone, here's the 200-day. And so when you get to that part, right, you get to that part of the chart that we were looking at in early February, you can see that this stuff became kind of extreme. And so it's a good thing to keep your eye on these things, which is why I just went and flashed those. They're worth keeping an eye on, in my opinion. We try to cover those whenever they're relevant that way. And you can see that early February coincides right there. So this did become extreme. And now you have to wonder, right, since this didn't really put that next leg together, I was thinking that it could, and that it could get above here and really, really sort of trick people because of essentially my macro take on things. Now, what do you get, right? Is this a legit false breakout, false dawn? And now they've got people trapped in here. And I do believe they've got a lot of people trapped into believing that. I do believe a lot of money poured into this market thinking that's it. That's all I need to see. And I think that maybe, and we won't know, of course, until time passes, but I feel like there's a lot of people potentially trapped. And I feel like they've flipped a lot of the CTAs, and they've got the public involved, and I think a fair share of professionals as well. And that's just my take on it, just from what I've been able to look into. And that what that means to me is, right, if this turns out that this was really a head fake, then a lot of people are trapped, right? They're in a worse position than they were back in here, because they really they paid much higher prices, and they didn't wait for the next leg, and they put a lot of money to work prematurely. And so that could be a problem. But now we're really at that spot, right? We're at that spot where you've got your former resistance line, you've got the critical longer term SMAs that are really right in this neighborhood. And so this is really an interesting kind of big deal-ish time that we're in. And I don't know if it will resolve very easily, because the market has fallen pretty strong, precipitously, right? Yet it's at 42 only. So could there be a little more weakness before you really get oversold on the daily? Absolutely, there could be. We know that. And that means there's more potential to go down, but with a little bit more fall, that might quickly turn into a mid to low 30s situation. But I think you're right near support. There's a lot of stocks that we'll cover that are right near support. But look, so far what we've covered is they came after virtually every sector. And now the bulls really are at that point where there are key SMA support levels just below where they are right now in the SPY. So this is the bulls' time to really step up, because they're about to lose whatever little bit of a grip they may have left on this market if they don't. So I think the bulls are definitely under pressure here. The reason why the chart has these percentages is because I wanted to, before I took that percentage off, I just want to remind folks that I don't know if it'll show this, but yeah, you can see that's the DXY. And so I continue to urge everyone, Ryan does as well, of course, that you ought to keep the dollar on your charts somewhere. I mean, as part of some grid or something, because you can see, right, look at the dollar topping out, look at the market bottoming out, right? Then look at the dollar weakening. The market pretty much found a way to rally as the dollar weakened. Now that the dollar has bottomed here for now, that was really just a day in front of the market top. And ever since the dollar's been working its way back up, the market's continued to run into trouble and sold off. So that's why you see that written. You see me or hear me talk about that, and when I chime in on webinars here and there, just because this is something to keep your eyes on. The other thing you can keep your eyes on if you want, and there's so many ways to do this, so I don't want to insinuate or leave people thinking that this is the only way to do this, but look at the yields, right? Look at the TNX. There's your 10-year yield, and you can see that pops and you're at a low, right? It pops from here, then the market comes off. It pops strongly, the market's at a low. It starts dropping, the market rallies, it drops, right? And right near that February 2nd where we put the highs in, that's when things turned and burned in terms of the 10-year yield. So this is why you hear me or see me writing this in the newsletter or parts of ideas or things like that in the services. So if you're not paying attention to that, I would, again, the final urging, I would do that, because it's been pretty strong for a while now, and it's probably always important, but especially like during times like these. So let's get rid of the percentages so we can move on. So the quick recap so far is last week, I think, was a challenging week because we had this strong big drop and then bounce off the 50 in the SPY, big jump higher for a day and a half, 2 days, and then you get the big drop lower, right? Big gap lower on the news that came out, I think, on Friday morning, along with Fed speakers along the way. So it wasn't easy to trade because you kind of had that little counter trend, a mini counter trend inside of here. And now the question becomes, what happens from here? That's what we're always trying to look at, of course, on Sundays for the week ahead. And it's very interesting, right? Because you've got the SMAs that are longer term, mostly already uptrending, and the shorties are downtrending. So you could end up with some really messy markets. If you ask me, you could end up with stuff like this back in here. And that's not easy to trade. You can get some great short-term trades going, but John Nigerian mentioned this in the Rebel Pit on Friday morning. I mentioned it in cocktail hour, right? Unless you really see clear breaks, as long as you stay really, I think, above this 100 in SPY, which is above, another key support zone, just a little bit lower. As long as you stay kind of above 390, I would think that you should be trading take what you can get. If you start seeing a breakdown and there's really sort of a driver for that, maybe rates are screaming higher and the dollar screaming higher, and there's a reason for that. Maybe there's a news driver to that that's significant, something that I would say is material for what happens with rates longer term. And it just becomes clear that whole hopium phase of, hey, the Fed's going to be done sooner than we thought, and inflation's peaking out, everything's everything's wonderful. If that really gets the final little bit of support kicked out from under it, then you could see that cascade type selling kick in. You kind of get this kind of serious day after day drop. You can see that there's going to be support about $10 down. We used 380 for a while, then 390. But all the levels, people say, well, you put too many levels out there, you're going to eventually hit on things that matter. But I think overall, the levels we've been focusing on have mattered. And for a while, that 408, 407 mattered until it doesn't, right? Then you go down to your next ones, and the 405 even held a little bit for one session there. But by the time the week was over, right, they shredded through things. Now you're at the super, super key area, and virtually everything's at that, right? If we jump over to Qs, it might look a little different, but it's all at a key level. Let's just magnify this for us. And in fact, I'll switch down to something like a 6-month view, so we don't have to do that over and over again. But you can see the Qs are right on the two. They got right on the 200 and the 150. They've got the 50 and 100 below those. But that's at a key level, right? Losing that 200 there is a bigger deal than the 150 because 150 and Rust, because more people, of course, are keyed in on the 200 than they are the 150. But anyway, the point is that they're both right about there, and losing both would probably just invite a test of the 50 below. So you'd get even more downside. You'd get another couple percent maybe of downside before another test would occur of an SMA. And of course, if that dovetails, which it looks like it does with a flat line, then you would expect there to be support, which brings up another important thing to note, which is that I have the assumption that support will support the first time and resistance will act as resistance the first time in the absence of a news driver that would allow the security to overwhelm that resistance. So something like in an index, I wouldn't just expect this to just plunge right through. I would expect there to be at least a day or two of respect for it, much like we got on the bottom on Friday. And is that enough do the bulls come in and say, oh no, we're in trouble, let's buy more? And which it never made sense to me, but of course, I'm not a perma bull, but we've seen this many times where it seems like levels get defended. People even use that term to say, yeah, levels get defended, but could they bounce it back up? You just can't rule it out, right? I would say, look, it has to get through there at the very least, that line I just drew, before you even start taking it seriously as anything more. Then your next level is going to be right up in here at about, in the Qs, it would be probably near 297-ish, 298, or you'd want to just see Thursday's high exceeded on a closing basis. But you can just tell looking at this that this is you do seem destined for some messiness, messy times ahead in terms of, I don't think it's going to be smooth sailing without some kind of a major news item that turns everything really strongly bullish. I don't know what that could be. I'm not expecting that. I don't foresee it, bottom line, but you just never know. There's all kinds of shenanigans that go on in the markets all the time. But right now, I'm looking at this saying they've gotten this stuff down to important levels. And if you go a little bit, we won't do too much of this because I don't want to belabor this, but it's all about the same, right? Where you can draw your 200 almost serves in purple, almost serves as your resistance line across the bear market. And now you're testing that to see, will this, as AJ has popularized it, likes to call it, will this turn into a role reversal situation? And I don't think it should, but I don't know what it will do. I think it should hold a little bit and then continue to roll over personally. But what my thoughts, and mainly that's based on my macro take, which is simple, not very complicated macro take, but I'm just saying and that's not the way to trade though. The way to trade is just to embrace the momentum, right? The price action, and try to take keys from these charts as to what's happening. And right now, I think there's great pressure. I think that in everything we look at in these major index ETFs, when I look at the cycles stuff that I like to do, the cycles are telling me that the bulls most of their grip is gone, and what little grip is left, they're barely clinging to it. So the bulls are really on the defensive here, as you may expect. That's just the bottom line, right? You could say, well, what's the problem? Like, look at IWM, it's still in this uptrend. It is, and you can't dispute that. But what I would say, that's definitely an intermediate term uptrend in my book. But did this take out this? No, it did not. It failed to do that. And now you're breaking back down. And right, it wouldn't be out of the question to say that we visit somewhere near the other end of this channel. So it's an upsloping channel. There's no doubt that's the intermediate trend. There's no doubt. The longer term SMAs are curling up. On that, there's no doubt. The shorter term SMAs, however, are rolling over. There's really no doubt to that as well. So this is what I would be looking at. Hey, do we come in here? Do we overshoot, get below these things, the SMAs that is, and then the key ones like the 200s, the last of them, and then it finds support here, somewhere near here, and then you start going back up again. You've got to say that's certainly possible. And I don't want to get too far ahead of myself, really, ever. It's not something I like to do, but everything's really on the defensive. They need to come in and arrest things quickly, even in the IWM, because really, my way of looking at it is simple. If they really start to beat down the QQQ and they beat down the SPY, then that's going to eventually just create this risk off. We're going to hell in a handbasket situation all over again. And I think they'll come in at that point and start attacking these as well. And they'll break this. They'll break below these. They'll break the support in that scenario. So I wouldn't rule that out just because this intermediate trend looks like it's better than some of the other index ETFs. If we kind of have just a volatile phase with some more give back and the bulls ultimately hold, then maybe you do like this one, the IWM, that is, because it is flashing some better price action, better technicals than the others. But even the mighty Dow, which was a leader for a while and then went into this consolidation, right? This is why I think I've always encouraged folks that are trying to learn the game to just draw as many trend lines as you think you should. You can always refine that later on, remove some. But we started adding lines to this saying something should happen pretty soon, because we were probably 3/4 of the way to the apex of the triangle where the two converging lines would meet. And we got close to there. Now you got this breakdown, right? They just started letting it go, got down almost to the 150 there in rust. And here's your 200, which would be the last of them. And I think the rapid ascent that they had, right, which they often do, it doesn't really, in the end, many times do them many favors, because, right, there's a little gap, I think, right in here. The high that particular day was 311.20. The low here was 311.60. So very minor gap, but a gap nonetheless. And when I kind of ignore gaps after 5 days. So that there's been a gap like we have here labeled, I don't really start thinking much about that gap if we have gone from that particular day and then 1, 2, 3, 4 more days. And if that gap hasn't been filled that quickly, then I kind of say, well, I'm not factoring that in until I start to see a real breakdown and I start to see the market start to bring that securities price back towards that gap. Well, that would start getting on my radar somewhat if we close below the 200 there in purple. And certainly, right, if this low here gets taken out on a closing basis, then you have to say, well, this is how I do it anyway. I just look at it and say, at this point, they may as well go take care of that maintenance, if you want to call it that, to just close the gap, because they're so close to doing that. But the smart play on that is, in my opinion, is to bid a little bit in front of there. If you're thinking that it's way oversold and starting to turn, I would have no problems buying just a little bit in front of that, because there's often also gap fill trades that you could take where they frustrate people that were waiting for that last penny, and then they jam it back up quickly. And then a bunch of people say, oh no, I'm missing it, I think anyway. And then they jump in and you get a little pop that you can trade and then get out. That's a little tricky counter trend type trade, obviously, kind of penny steamroller trade, but it is what it is. And it does, if you spot the right signs, I think it's worth taking a look at. Of course, short leash since it's counter trend. But hard to like this breaking down, right? The assumption is that usually, right, that if you come into something from an uptrend, go into a consolidation, you ought to break out to the upside, but we didn't, right? We broke out to the downside. So a lot of those signs we were seeing, and I think a lot of them were somewhere in, was it here? Yeah. So here's that breadth screen I always lay out. I always like to just bring up briefly, and you can just see that a lot of the stuff that I keep on here, and not everything's completely relevant, but really this stuff's been deteriorating. Overall, things have been deteriorating for a while. So that's why I keep this chart, because I want to see, right, what the market's sort of doing beneath the surface. And sometimes it can give you a false impression, right? Where, hey, you expect things to break down. What it does for me, though, is it keeps me, I think, respectful of risk. So price action being really important in the way that I like to weigh things. But at the same time, I want this at my back, and I'm really less of a true believer if a lot of the sentiment stuff, and I have other charts for this stuff too, but just in general, if the sentiment's not supporting what the price action's flashing, that is always a little bit of a yellow flag where I don't want to get caught overstaying my welcome, right? And pressing my bet too much against that, because that hasn't worked out well for me. But luckily I got into that stuff a long time ago and solved it. But when I tried that in my earlier days, overstaying my welcome as a bull, it didn't work out if things were deteriorating overall. It just became very hard. A couple stocks you can certainly do that in, but at times, but yeah, overall it didn't work so well for me. So I always try to be on guard for that. But you can see here's just a simple, right, unadorned, relatively speaking, situation, and we're right at that line. That's why I'm saying this is really an interesting week, because you're just not overdone too. The other factor is you're not overdone, so you do have more room to fall. But I have to say that, right, you're on support for the first time. There should be, again, assuming a neutral environment, there should be this desire to buy on support the first time we get here, right? So there should be a little bit of an attempt to do that. We'll see if there is one. But this is very much at risk. So the bottom line is, so let's recap, not the prior week, but the week that we just had. Let's take a look at that. We basically saw risk off. I pointed out why I would urge you to keep the TNX and the DXY on your charts. I think more and more control continues to be amassed by the bears, and the bulls, with little control maybe that I could see on cycles that they have, is close to giving way. If this month finishes poorly, we've only got, I think, a couple more trading days, but if it finishes really poorly, I think that's going to be very troublesome for bulls. I think that means that probably what we saw here was a great bull trap. Not as great as I hoped it would be. I hope the bull trap would get up past here to really clean everybody's clock that was betting against things. So, because that would make the trap even more vicious for us to be able to trade the downside with more oomph. But you could still hopefully get some good side trades if this turns out to be a bull trap. But they need to really step up at this moment. This is part of the summary. And these tests are upon us, right? We've already started testing things, as we can see, on SMAs and on this former resistance line, which we would expect to try to at least attempt to become support. So my other take that I would share with everybody is that the macro situation, I think, is still deteriorating. I think clearly, and let's see if I can get us to there, because I think I've got it is it under unusual activity members? Yep, so this is where it is. So what I'm getting at is the Fed watch tool. And look at this, like almost a 1/3 chance that you're up in the next, right, by September 20th, right? So that would be in the next 6 months that you are, well, my bad, 7 months. But you would have a 1/3 chance of jumping effectively a full point from the current target rate. And it looks like 0.75 is 0.5 to 0.75 is the odds on bet, right? So this whole, hey, rates are going to top out in the winter or early spring thing looks like it's really been taken to task, right? It's been taken behind the woodshed. The probabilities, at least the way the markets are pricing things, are favoring this situation. And so with that heading higher and a lot of big money trapped, I think the potential's there for a really strong move lower, but we have to see if everything is able to hold. Now, I don't want to get too apocalyptic here, too bearish, but the reality is that for the second week in a row, I think things took a real turn for the bears. Note that this is the third year we've been tracking there in green, third year of the presidential cycle historically, and this tends to find a higher low than it put in February, wherever the Feb low was. And then you still have up and away for a few more months before it gets a little bit dicey. So the analog to this sort of seasonal cyclical stuff has worked out probably better than you would expect because of the massive first 6 weeks of the year, first 5 weeks of the year being such a jam job to the upside. But this is where we would be. Now, this is another reason why bulls, right, if they're going to keep this type of thing, and there are people and firms, of course, that trade off of these types of things. It's just a big part of what they do. They need to keep these people true believing by holding the market here, right? Otherwise, they're going to lose those folks, right? So we may as well take a quick look at the fear and greed. Again, far from a perfect estimate, but it's something we can latch onto, and you can see where we are. So again, if you're still we were coming down from higher levels of greed to this point. We could take a look at that on the timeline, I think. And you could see that basically right early in Feb, as we noted, you were in extreme greed. Then you remained in extreme greed. Then you were just, I think, in greed and of late. And then of course, you're backing off still. So you still have room to back off, I think, in here, which would say, okay, well, there's possibly more correction. You're not anywhere near fear or extreme fear, right? An alternative view that we've been looking at is this one. And this is still in the, there it is, greed level of 66.6. So they're still giving it the benefit of the doubt that way. But parts of it, apparently, right, I guess what they saw last week, excuse me, has fallen into they've got it as to a more concerning situation. So a little bit of a different take there from what we had been seeing. So things are not as good as you would expect after what we saw. What I want to do too is show you some of these bigger names, right? So I'll move this. Actually, I don't have to because I think I've got this on another screen, but I could move this and show you. Let me just get a quick view cut down for everyone. But you can see that we're at these big important levels on the index ETFs. The dollar and the 10-year yield are rising. The VIX will cover towards the end, but it hasn't done much. But let's take a look at Apple. And so we'll go through the top 10 stocks really quickly. And you can see that Apple is looking a little vulnerable, right? Look, by the way, keep your eye on the RSI on all these, and you'll see that most of them, I don't think, have gotten anywhere near 30 or below. So this looks like it could certainly drop down to the 100 or 50, right, in a weak market. That's for sure. And Apple kind of could be its own thing, but it's very important. It's right below the 200 there in purple. So that could, of course, always be that fake out move. Hey, flash the close below there and reverse things. But overall, you can see that this is not really at it yet. It hasn't shifted momentum back to the upside. And so given the way that it looks and given the precarious state of things in the market overall, that definitely to me flashes, vulnerability at this particular snapshot in time. Microsoft, the next biggest dog, 45, still has room to go lower potentially. If it loses the 50 there, only the 100 would be left. Okay, so just keep that in mind because then you could start to see that thing descend even further. But if you look at that one, to me, until that gets back above the 200 there, in purple and closes above there, I would jump a trade early, sure, but I think that's where it would start to get sort of a little bit safer, and you'd start feeling a little better. Hey, it's at least it's back above the 200, but it isn't there yet, and it wouldn't take much for it to visit the 50 and the 100, right? So that to me doesn't look like a chart that's saying, screaming, "Hey, buy me right now." If it starts turning, yes, maybe you start looking at it, but it doesn't look like an immediate buy. Now, we said this before a few weeks ago. What did they do? They came in and bought a bunch of charts that looked, I think, challenged at the time. So that was an exercise in complete futility. I don't know if it will be this time, but this is not good action out of Google, right? Getting above the 200 day there in purple, and then flashing a little bit of negative divergence on the RSI there with this double top. And it's been curtains, as they used to say in the cartoons. It's been curtains for Google ever since. I mean, it's lost every SMA. Most of them now are all downsloping as well, if not all of them. So that looks really rough. That does not look good. I mean, it's not, in my book, it's not an immediate buy. It would need to, it's not something I'm rushing in to buy yet, even though it's got a 38 RSI. Amazon, next biggest dog out there. This one, this is losing the 50. This looks like it even made a new, or let's see, low 91.52, low 92.32. So it came close to that low. If it loses that, right, it's probably on its way back down to these lower levels. But that, again, I don't think that looks good. Look how the short-term SMAs are rolling over as we speak. So that's also challenged. They need to come in, and 42 on RSI. So again, still has a little bit more room to drop before it even becoming close to oversold. Even Berkshire, I looked at this one. This one had a better kind of that reversal day, and I guess right on this and all that on the earnings performance. But you can see that this certainly looks better, but it's below the 50 and the 20 and the 15 and the 10. So, I mean, this is, again, nothing that looks stellar in terms of, hey, I'm breaking out. And it has been able to withstand other times where the market was in trouble and it was doing better, but it's now sort of, I would say it's a lot closer to the lower end of its recent range. It may turn into a buy again as a result. Maybe these levels will be tested and then they'll support it, but it doesn't look really that great breaking down below what was another kind of little range that it had been in, and losing support of the 50s. It almost lost support of the 100, but they saved it on Friday. But again, I don't think that's something that I'm rushing in to buy at this very moment. I want as a trade, I would rather see a little momentum return. Tesla, it too, right? It's on probably some key support right near here. If it loses effectively, right, last week's low or the 20 SMA there in light blue, you would expect it to come and back and probably test that 100 there in a weak market. So that would be 157 on the RSI due to the big run that it had and not giving all that much back yet. So it has more to go. If the gang wants to start slamming it lower, it's got more before it approaches overbought. Remember on the gap situation, I mean, within 5 days, a lot of these gaps close, or they don't close for a very long while thereafter. So we still have a few days left. It would be gap plus 1, 2, 3, 4. So we only have gap plus 1. There's another 3 days left that this could potentially start to close on. So in a weak market, I actually have ideas in on this one. I've got bearish ideas in place in case things continue to deteriorate in a lot of names. As a matter of fact, it was a really kind of bearish week for UOA, I thought, the way that chart complexions looked. So we just kept going with it. But right, the bears have been in control for a little while. Again, they're on support in a lot of cases. Can't be shocked if you get a little bit of a relief rally, see what happens. But bottom line is, right, if the market deteriorates, this one is maybe one to keep your eye on, because you could see a gap closure attempt. Now, clearly this has been doing really well, but it's outside of its Bollinger Band still, right? You can see the RSI, you can see the RSI readings, and I'll make those a little larger, but you can see they continue to worsen as the move wears on. And a lot of people like to keep an eye on stuff like that. So this one has that potential. I think in a down market, or where the bulls just give up, which I don't expect them to, but I'm just saying if that were to happen, where they put in a feeble attempt and we just keep going lower, that would be one that maybe they'd start coming in for, despite the apparently stellar results of the earnings report. Here is the breakdown below the 50 in Visa, and the gold line there, of course, being the 50. So very close to breaking down, right? New lows there. There's a big gap between the, visually at least, between the 50 and the 100 and the 200 down here in purple. And I think I have a bearish trade in on this one as well as a result, or had one in. So I can't remember them all. Just such a busy week. It's just been that way. UNH is our next biggest name. And we'll wrap up with, say, Exxon, and I'll maybe throw in Meta for good measure. But there's UNH, right? So these XLV and things like that were doing better, but they are struggling. This is now taking out the last of its SMAs. Most of the SMAs are downsloping. I mean, not really something that looks all that great right now, right? So this is another big weight that just doesn't look like, hey, it's ready to go back to the upside at this very snapshot in time. And that's just the way that it is now. They did, again, to reiterate, they pulled a couple of weeks ago, they bought a lot of things just out of the gates, and that kind of blew me away. I'm like, are you kidding me? Really? I don't know what that was, but it was something. Here you go, kind of trying to cling here in Exxon to the 100-day. But you could see that support's been cracked here. I actually have been putting some bearish stuff together a little bit in the energy space. The SMAs of the shorties are rolling over. They still look better longer term, but there's some concerning things, I think, here in energy, that it lost this support. That's the bottom line to me, is that it lost support, and now, it's fighting with me a little bit. That means I probably need to wrap this video up, or I'm going to lose things. But if we just try to put something in here, if it lets me, come on, guys, I'm just going to let that go for now. But that's lost. Sort of, you get the idea. That support line. There's a big drop down to the next levels, right? Wow, it's really fighting with me here. So I might have to wrap this up a little prematurely. Yeah, because I could lose everything in terms of what we've reported. Just, I don't know why it is. Zoom really is a hog on things, and it really fights with me sometimes. But those were the top 10. Let's see if it lets me do Meta. It seems really slow right now, but let's see if it lets me do Meta. Lets me do Meta. We could at least do that to wrap that up. And I'll have to apologize for like the VIX and things like that, and that I haven't been able to get going. But I've got an idea here on the bear side as well. I think Greg has one too, I think, in Rebel Pit. And you can just see that this gap may matter in a washout market, right? If you start seeing that selling spilling over and intensifying, and again, I'm not saying I'm not forecasting, I'm just saying the potential's there. If the bulls fail to really come in and support this market, I mean swiftly, like early in the week, they could start to trigger some really rough technical selling, and that, of course, could pick up the pace, and you could be just going lower and lower, right? And then eventually things get caught up in widespread selling, and that's where maybe this gap would get closed. So I think I still have a valid idea in there. But again, right, what's telling you to buy right here? Right? What do you love about buying here? If there isn't news for the stock, or isn't news for the market, why are you rushing in to start buying here? I mean, only if it turns around and starts to re-energize, because you could say, well, that's sort of like a flag, or extended flag, or pennant, whatever you want to call it, and then you're going to put a flagpole here, go here, and then you're going to get another leg. That would be something I'd buy into if it starts to take out some of these SMAs and the market has some sort of a news driver that really turns it around. But something more than likely that would come out of the Fed. But absent that, right, I don't really want to touch this thing in a heavy market, because I think that would be just an invitation for this to get closed. It might take a little bit longer to do, like kind of like here, right? It took a few months before they were actually able to close the gap, but it might take a little longer. It might take a few weeks in a rough market, but its potential is definitely there technically. So those are probably where we should end. I'll try to sneak the VIX in We did take a look earlier. We just noted the dollar and TNX are moving up. The VIX is also doing the same. Everyone, its struggles have been talked about a lot. It's been interesting. It's finally getting there. Finally, maybe, and I've got VXX somehow. How did I get? I thought I typed in VIX. I don't remember typing in VXX. Maybe I did. But you could see this. I was about to say, I knew it was at SMAs, but I didn't think it was the 50. And yeah, it got up to the 100, 150 there. It's above, right, the 50 now. It's starting to get some rounding up. And so it just, this, I always look at this like it's very hard to chart the VIX like a typical security. I don't really look at it that way. But I think when it starts to percolate, it usually has a pop, then drops, then comes back for more. And then, right, if it finally starts taking out highs there, then it's worrisome. But the fact that it's starting to percolate up a little bit off of those lows, I think that does tell you that, right, that just tells you that what you're seeing in the markets is probably right, that you're perceiving that the risk is higher than it was, and things are not as good as they were technically. So the position, so the situation exists that you could really get a bigger sell-off here if they fail to hold some of these indexes and stocks that are very close to important support levels. If they don't do that, this thing likely goes as those decline, of course. So that's where I'm at. I think the tests are really just got started, and the bulls are the ones that have to answer the call. In my book, it's not as though the bears need to keep pushing this down. I think the bulls need to say, no, it's been pushed down enough. It's right near support. We're buying it. We still believe in our narrative is intact. Because I don't believe that narrative and haven't believed that narrative, it's been more of maybe they're right, maybe I'm wrong, but I just don't believe that the Fed was done, and I just don't believe that it's all over yet. And I just believe that the interest rates are going to really wreak havoc. This level of rates, the level of inflation we've had, and being so debt and credit dependent in this country, that to me is why it's such a problem. It's not as though historically 6% or 5% rates or something like that are extraordinarily high. It's just that inflation hasn't come down as they said it would. This is the bull narrative. As much as they said it would, as fast as they said it would, it hasn't happened from what I can tell. The Fed seems to be continuing to indicate that they're going to keep ticking things up. And that is something that a lot of bulls were kind of calling the Fed's bluff on, that the Fed hasn't caved in yet. And I just think that makes the prices of everything, right? Financing is very high right now relative to what it had been for many years, which I think is a shock to the system, because people are used to obtaining credit at really cheap rates. And now it's just not there the way that it was. So I think housing, automobiles, like some of these durable goods, these bigger ticket purchases that really drive things, they seem to be at the very least challenged to me. And given that interest rate climate that we're in and the inflation climate that we're in, so I just don't see how that turns into a soft landing. That's been my general take now for, well, really almost since this whole thing started. So, and I mean by that the bear market. And I just don't see past that yet. I just don't see that that's changed or things have ameliorated all that much. So I've been willing to go with the bullish action really shortly there after the bottom got put in, but I've been trying to believe it a little bit more and more because they've been able to maintain it. But now, to me, reality seems like it's starting to kick the door down a little bit, and we'll see. Right? So I think that's why I'm looking at it, that the bulls are the ones that are now under pressure, because I think they're the ones that have been spinning things in a way that I don't think was completely viable for me at the very least. And I look at it like now they need to step up and say, no, we really believe our own story. And if they don't, what happens. It's going to be more risk off. It's going to be people trapped, and it'll get exacerbated, I think, to the downside if these big time levels that are nearby, just a little below where we are, give out. So that's my kind of final summary there. I think where I stand. I stand saying that and it definitely frozen on me. I stand saying that, hey, we are in a situation where your risks are really ratcheting up now, and you've got to pay attention. I think it's going to be wild. Excuse me. I think that you're going to get, the first time you hit these support levels, if we continue lower, right, then you've got to expect them to support the first time around again, absent major news. If they then bounce and that bounce doesn't amount to much and you roll back over again, right, then it gets really a lot more serious. Can't say you don't go through the first time. I'm just saying generally they don't go through the first time. So if you're hedging an active position, right, I would complete a trim and a roll on support if it looks like the momentum is shifting back to the upside. And then, right, if it does, and you want to reestablish because you see it rolling over beneath what was formerly support, it hits an SMA that was formerly support, then turns into resistance and rolls back over. You could reestablish some of your contracts from a higher level. But being active adjuster in what could be volatile markets is going to be, I think, critical. So I better end on that because I'm having resource issues. Despite having a supercomputer with 64 or whatever gigs of RAM. Not sure why I'm getting this problem here from Thinkorswim. But anyway, on that note, I hope something to share with you this week helps you out this week or helps you out in the future. And thanks for tuning in.